All right, welcome everyone. We are going to go live on YouTube. Looks like we're live on Facebook and also on Instagram. Make sure this is good to go.
Awesome.
So, welcome everyone. Stephen Taylor here, realtor in Chicagoland. This is Keys to the Keys, where we're going over pertinent, needed information for you and yours to know about buying in Chicagoland. So, I have a special guest today. We're going to be talking to sellers today. All right. So, people who are looking to downsize specifically. I've been getting a lot of calls lately from individuals who are looking to sell their long term homes. The kids are gone. They're tired of the stairs. They want something smaller. They want something a little bit more affordable. And why not downsize? So, I have a special guest from New American Funding. We have Logan Mead with us today. Logan, how are you?
I'm great, Steven. I appreciate you having me on. How about yourself, man?
I'm doing all right, doing okay. It's the weather's breaking here. It was cold the last few days. It's getting a little warmer, so I'm definitely excited to finally get some the summer going. So
For real. It's been a long time coming. Can you remember? I'm just a little bit upwind from you out of Detroit, Michigan. So everything you're getting, I'm just getting 12 hours later. So
right, right,
so
right,
so so,
right.
so yeah. What's the weather going to be tomorrow? But yeah, I really appreciate you because honestly, I'm in the same page. I'd say it's all about 25 to 30% of my clients that I help close on a monthly basis
Okay.
are specifically looking to downsize. So I'm
Yeah.
glad that you had me on for this.
Definitely, definitely, definitely. So, Logan, we met actually looking to help a couple, a mother and son pair who are looking to sell their home and downsize and buy a townhome. And that's when, you initially, told me about these different products that you had with New American Funding and how they
Mhm.
can really assist with like helping individuals who are looking to sell a home and then purchase another one. So, kind of what are you looking at over there? Like, what are you guys working with?
Yeah, no, I appreciate you asking because honestly, it's a very competitive market. I'm sure you can very much agree to it. This time of year as well, it's just gasoline on the fire. It's
Yeah.
like the housing market's already people are kind of done waiting after like okay, rates kind of are where they are now. We're not going to be looking at those 2 and 3% that I wish we could still be at.
Mm, yeah.
I'll probably be on a beach somewhere right
Right,
now.
right, right, right.
But a lot of people are kind of accepting that and getting back out in the market. So it's very competitive where I'm seeing often houses going for over and these
Mhm.
situations are like contingent offers, as solid as it might be, even if they are over asking, just aren't getting accepted, unfortunately. And just
Mhm.
because the sellers, knowing it's their market, they have that flexibility. So the two main products that my clients have been using when they're in these situations is first, and the one that mother and son that we actually discussed with them would be the bridge loan product.
Uh-huh.
That's one that's pretty pretty well common. It's been established in the industry. It's been around a while. Um, I won't say it's anything unique to us, but it's a awesome option because what we're able to do is we take the equity out of the departing residence, the home
Uh-huh.
that you're looking to sell. We use that to close on the new home. And after we close on the new home, in the meantime, we're going to make sure that the home's listed.
Mhm.
So have foot traffic coming in. But the cool thing about that is it's a flat fee that's taken out of exactly the proceeds. And when
Mhm.
you do sell your home, and anything that's remained is still there. So to put it simply, it's just a way to access your equity without having to go through like or pay the fees of like a cash out refi or like going through the getting a HELOC and without a strict equity requirements as well. So
Okay.
that's a great option.
So let's back up. So I want to make sure that we kind of understand what we're saying here. So I have a home in Chicagoland, and like you mentioned, competitive. Like here, we're still dealing with low inventory sellers market. I know nationwide they're saying, oh,
Mhm.
it's a buyer's market in Texas, Florida. Here, it's still favoring the sellers. So hey, I'm in a very competitive market. I own this home and I want to buy a new home. So this is really for people who, because I know some folks they can qualify for to have two mortgages at a time, right?
Correct.
Right.
This would be for people who don't
And
specifically.
and most people we would say probably don't.
Just because you can, I always tell all my clients this, just because you can doesn't mean you should. Like, I've never made one of my clients house poor. So we're not starting here, because just because we can doesn't always mean we should. So I'm glad you say that.
Gotcha. So I have this house. I'm looking to sell this house, but working with Logan, he's like, hey, you could do it, but you might not want to, or you can't actively have two mortgages. So you can't buy this new house and then actively hold your current house. So you're going to need to sell your current house in order to buy the new house. And so this is for the folks who are looking to do that. And from a realtor standpoint, whenever that's a situation, we have to let the sellers know, hey, my client is going to buy your house contingent upon them selling their house first, which I know for a lot of sellers, they prefer to have something a little bit straightforward and easy. Like, they don't want to wait for this new buyer to come buy your house. And what if they back out of the deal? And then you have to back out of this current deal. So it's a lot of steps to it. I know a lot of sellers, they don't want to go under contract with someone who is looking to sell their house first in order to then buy their house. So this bridge loan is a way to kind of get around that.
Exactly. You're exactly right. It's not only is it able to access the funds that they would use from their departing residence for the new home, they're able to do it with the stronger offer as well. So it helps on both fronts.
Great. So with this loan, they can actually come in and say, hey, we don't have to sell our home. So we're not writing that on the contract. We're just saying we're able to buy this home outright.
Exactly. As far as the sellers are concerned, they wouldn't even know you have a home for sale. All they'll see is you're having a nice down payment because you're using the funds already.
Mm-hmm.
And that's all they like to see. So if anything, it's going to make your offer just that much stronger.
Great. Now, you mentioned equity. You're pulling the equity out. Can you kind of speak about that? Like how you guys are determining the number and,
Yeah, of course. So the cool thing about it as well is 99% of the time we're able just to use what's called an automated valuation model, or an AVM, to determine a good idea of what the home is worth, and once we know how much it's worth, as well as what's owed on like any liens, like any mortgages they do have on the property.
Mm-hmm.
That number in between is the equity we can use.
Wow.
The one caveat is it's just like a cash out refinance where we can only go up to 80% of the home's value for the loan.
Okay.
So that bridge loan will be taken out to A, pay off the liens, and B, any additional funds that are going to be used for the down payment on the new place.
Okay.
Mm-hmm.
So you're pulling your equity out directly and then using that as a down payment for the new place, and able to kind of expedite things that way instead of waiting for someone to buy your home.
Correct. And the good thing about it as well is, well, like I said, there's no monthly payments with the bridge loan outside of taxes and insurance, and that'll honestly just depend on the schedule. I know it's due pretty frequently, and especially if you're out in Cook County. But outside of that, the only monthly payment, the only payment for the bridge loan would be once you do sell the home.
Mm-hmm.
We'll subtract the funds that were used already minus the 2% service fee, because that's all the charges there are with it. And then whatever that's left over goes right into the buyer's pockets.
Oh, wow.
Yeah, because it's still their home they're selling. No, because after all, once the bridge loan's paid off, if they're not maxing it out, like just because they can go up to 80% of what the home's worth, doesn't mean they have to. Maybe maybe their current mortgage is only 30% of the home's value, and let's say they have a $1 million home, their current mortgage for 300, and they only want 200 for the down payment.
Mm-hmm.
They'd still have just this obviously rough numbers here, 300,000 left over from it. So it's still their money. So once they do sell the home, anything that's left over after the repayment of the bridge loan, it's theirs.
Oh, that's cool. So cool. So they can kind of do with it whatever they
exactly
really wish.
Exactly.
Okay.
So cool. So it's really up to them, depending on what they want to do for the down payment for the new place.
Great. You were telling me about another option that sellers could use too, who are looking to downsize or relocate.
Yes, and this option is honestly both. I like to put them next to each other because this is actually an exclusive program we have at New American Funding. It's called our NAF Cash program. So how it would work is we empower home buyers to put a cash offer onto a new home. How that would work is we would underwrite income, assets, and every ahead of time for when they're purchasing the new place. Send in whatever income documents they have. Nothing out of the ordinary, just doing it ahead of time. Once we have that approval, we would be able to give what's called a NAF cash approval letter. And that's going to actually come with a bank statement from our company showing the available funds for the cash purchase. And we will actually purchase the home as a cash offer. And I'm sure you know, everyone says it, cash is king. Cash is king.
Yeah.
So what they're able to do is, so that transaction, the only caveat is we do have to have an inspection, just make sure that it's real. No one wants to get into a money pit. So we will do that as part of the NAF cash process. But outside of that, it's going to be very smooth, traditional, like 1 week close that you would normally have with cash. So what would happen after that point?
You say how quickly can this happen?
1 week.
Oh, wow.
1 week close, because it's right in the name. It's still a cash offer. As far as the home, the seller for the home our clients are purchasing, as long as that seller likes a cash offer, that's all they're going to see it as. So how it'll work at that point is once we start that transaction and we know that the inspection comes back clear, we'll also start the new mortgage. So in the situation here, because this NAF cash program can be used whether or not you have a home to sell. So a first-time buyer could use this program as well. So if we're in the situation, like you said, where we have a departing residence, we're looking to downsize a bit, what would happen is at that point, we make sure that the departing residents, and again, this is if, like we said before, if either both payments at the same time, either we can't qualify or it's not comfortable with it, or it's just too much. So that option, make sure the home's listed, and once it does sell, we would use that money to open up a new mortgage to pay back the cash transaction. So depending on how much time there is, rent would be charged, and that is based off of how much the loan size is, where it is, a couple things. But the way we calculate it is the average cash savings, like when you're coming to placing an offer on a home, on average, you're getting anywhere between 8 to 10% discount as to someone who's doing a financed offer. So we take that 8 to 10% and factor it in, and just let's just easy. Let's just say 300. Let's just say we have a property for 350,000. So if we take 10% of that, let's say that's realistically 315,000. It's pretty reasonable. Like, would you agree that that's pretty reasonable? Like 350,000 home, 315 for a cash offer. Do you think a seller would like that?
Yeah, cash closing within a week. You'll definitely pique some interest there.
Perfect. Yeah. So right there, like on the surface, that's $35,000 in equity savings. So there's also a 2% service fee with this. So we'll subtract that from that 35,000. Then we'll also subtract, like, for example, let's say because usually there's no more than 30 days between, especially because we're in the markets where we're using these cash offers. It doesn't take long for our clients to sell their departing residence. So usually doesn't longer than 30 days. So I got everything just because I like looking at things in real numbers.
Yeah, definitely.
Because get that breaking down. So I got the property location. Let me get that in Illinois, because the service fee is a little dependent on the state. So how that would work out for you. So I'll start from the top, $350,000 home price. We offer $315 cash. When we close, seller loves it, they accept it. The rent costs, let's say, could call it for the 30 days between the cash transaction closing and
you selling your home.
Exactly. That would be roughly $1,600 in this scenario, plus the roughly $6,000 service fee. Your net savings is almost $27,000.
Wow.
Because, like I said at the beginning, cash is king.
Definitely.
There's a couple caveats with this one. The one reason why sometimes we go for the bridge loan as opposed to this option, because obviously this option sounds much better on the surface, is this requires a 5% earnest money deposit on the cash transaction. So
Okay.
where the bridge loan is really beneficial is if someone doesn't have any of their own funds or savings to purchase the new home, the only funds they have is the equity in their departing residence,
Hmm.
the bridge loan is perfect.
Okay.
If they have, like I said, that like a little bit like that 5% for the earnest money or down payment for the new place,
Hmm.
the cash transaction is always the best way to go about it.
Wow.
So that's kind of why I always have those two options side by side for when people are looking for relocating. It's really going to depend on each client situation, what
Right.
they have saving, what they're comfortable with, and what's going to be the best for them. So they're both great options. Honestly, I love talking about them because it's, like I said, the thing I like about us here is we got a hat for every head.
All right.
There's a little bit of everything. So for every situation, we'd be able to help out.
That's cool. That's cool. Who qualifies for this? I mean, is it kind of like a standard like credit score that you would find in like conventional FHA, or kind of what are some of the qualifications that a person would need in order to use these options?
Yeah, great question. So for both of these options, where they are similar, is unfortunately FHA financing
Mhm.
is not something we offer yet.
Right.
Mhm.
Okay.
Yet.
Okay.
That's all I'm saying. Hopefully, maybe in the near future, but
Okay.
yet. So the options would be either conventional, no traditional Fannie or Freddie,
Mhm.
or we do allow VA
Hmm.
as well. So when it comes to credit score, the bridge loan, believe it or not, does have a little bit higher of a credit requirement
Mhm.
because there is no out-of-pocket costs. The only thing we'd be collecting is just from the proceeds of the sale once their home does sell.
Right.
Um, because of that, the minimum credit score is a little bit higher. That's going to be at 700.
Okay.
NAF cash program, however, the minimum credit score is only a 620.
Oh wow.
So that's another thing. That's another factor we'll look at when deciding which one's the best for the client
Okay.
is where that credit score is at. So, but yeah, so I'd say, but so you have at least a 700. No, they're all going to be great options.
Great. 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 Um, and then you can always kind of just walk through people and run numbers. We don't have to get into the weeds, um, today with that. But um, but the big question I know a lot of people are going to ask, is like, hey, what happens? I get this new house. I'm still waiting to sell my home. You know, about the different fees. You mentioned the 2%, fee up front. What are the other? You mentioned rent. Like, how is that calculated, and what goes into that?
Yeah, no, great question. And am I frozen up for you on your end?
I lost your camera.
Yeah. All right. Not sure what's going on there. Well, I love technology. One step forward, two steps back. All right.
All the
That's
time.
okay. So
We can we can we we
we'll
can hear you though.
okay. We'll take it for now. So and that's a good question. So how that rent back is actually calculated is based off of a few things. It's calculated off a daily rate,
Okay.
and that rent back is only applicable to the cash program.
Okay.
The bridge loan, there is nothing like that. So with the NAF cash, the way the rent's calculated is based off of the loan amount of this would be off the cash purchase price.
Mhm.
So it'd be based off the cash purchase price of the property. And bear with me, I'm gonna double check the exact numbers that's used.
Okay.
Um, but basically it's a daily rate that's calculated, and it wouldn't be due until 60 days. Like if we got up to 60 days between the cash transaction closing and their home still hasn't sold for 60 days,
Mhm.
then the rent would be due,
Okay.
and then we'd have to be due at a monthly basis. But again, this program is where we're mostly using it is in those highly competitive markets. So
Mhm.
it's very rare where we see those situations where someone's using the cash offer program where the home and they're selling their current home. Very rarely where they see them holding both for more than 30 days. You know,
And when you mean by that, you mean like if I'm the person who's downsizing my current home that needs to sell, um, we want to make sure that that's in a market that it's not going to be sitting for 6 months or something like that.
Precisely.
Gotcha.
Exactly. So this is very much designed for those markets where you see homes where homes are listed for less than a week. And
Mm.
Chicago and Cook County is very much one of those markets. So obviously every place is different. No, so if I say anyone who does listen, feel free to reach out to me for anything specific and how it would affect your situation. But if you're looking, if you're in an area where Steven's going to help you out, this is going to be a great option because it's competitive. Your home won't be listed for long. I've worked with Steven for a long time. He's great, and he's going to do his thing and get it sold as soon as humanly possible. So, yeah, I'm a big believer in. I'm here to take that worry off you. My job as a loan officer is taking the stress off your plate. So, anything that I'm going to be able to do that, that's how I'm here to help.
That's great. I appreciate that, Logan. Logan, how can people get in contact with you?
I am glad you asked. So, there's a few ways we can do that. I'll share with you the link to my personal little microsite through New American Funding. That's just if people want to work with me directly, love to. Obviously, you know as well as I do, we all work on referrals in this line of work. So they can go to the website, fill out a little bit of information through our company portal. I'll get that go right over to me. And as soon as I am available, I'll be reaching out. We'll get connected and we'll do what we can to get you a new home.
Great. And I can attach that link if you send it to me. I can put that link in the notes or comment section. So if you're looking to get in contact with Logan directly, look for that link. However you're watching this in the comments.
Perfect. And I think I just sent that over to you in a little private chat.
All right, cool. Yeah, I'll definitely get that in there. So that's the best way to get in contact. Use the link, and then you'll take it from there.
You got it.
Cool. If you want to get in contact with me, as always, shoot me a DM, message me below, and I will definitely, find you. You can also shoot me a text or call at 708-858-3590 if you are looking to purchase, or in this case, you're looking to sell and downsize. So you're selling and purchasing in the greater Chicagoland area. So Logan, before we get out of here, any final tidbits or things that you want to share, or good success stories that you've seen, with either of these programs?
Success stories I've seen, like I said, like cash is king, and you've seen some pretty crazy stuff. I always err on the side of caution when going over numbers, but I say like 8 to 10%. But I've seen as much as 20-30% off of purchase prices. So it's one of those things where, or in other situations where clients are just placing offers on multiple homes, and unfortunately they're just not getting accepted because they have a contingent offer. Them looking into the bridge loan, and then the next home they make an offer on gets accepted. I've had that happen multiple times over my career. So it's hard to pick just one. It's just it's been a privilege to be at a place where I have the opportunity to help so many different people across the country. So we could be here for a couple hours if I went over all of them, but the only really way to see the help is just reach out to us, and we'll take it from there.
Well, we appreciate the time, Logan, and thank you so much for sharing about these different options. So again, if you're looking to downsize, you're looking to relocate, get in contact with us. Let's make this a smooth transition, and we can also answer any other questions that you may have. So be sure to follow, like, share, however you're watching this, as we continue to give great tips for individuals who are in the Chicago market, looking to buy or looking to sell. So Logan, thanks again. And everyone else, we'll see you soon.
Thanks again. Bye, guys.
Bye.